Two things happened Thursday that are not supposed to happen on the same day. The Dow closed at an all-time high, 52,900, and chip stocks got hammered, the main semiconductor fund down 4.5%, its worst two-day stretch in months. A record and a rout, off the same jobs report. This is your asymmetric daily brief for Friday, July 3rd, the full picture in the next 5 minutes. First, the board. The Dow 52,900, up 1.14%, a record. The S&P 7,483, basically flat, torn between the two tapes. The Nasdaq down 0.8 on the chip rout. Gold 4,189 catching the rotation bid. Bitcoin 61,500, up on the week even as its funds bleed. Oil $68, back at pre-war levels. And the 10-year eased to 4.48 as the hike odds fade. One word for this tape: divided. Now the reads, where we differ from the crowd. Read 1. Everyone looks at the all-time high and says the bull market is intact. Here's the tell: the Dow rallied because the jobs number missed. It's a rate bet, not a growth bet. And a rally that needs a weakening economy to keep going is a fragile one. Read the internals, not the headline. Follow the money. June payrolls 57,000 against 115,000 expected, the weakest in 4 months. Unemployment ticked to 4.2, and even that was flattered by people leaving the workforce. The market cheered because cooling labor pins the Federal Reserve. September hike odds got cut to about half, but labor is now cooling faster than inflation is falling. That's a yellow flag dressed up as good news. And zoom out on the Federal Reserve, because the rate story is really an oil story. The hawkish turn began with February's energy shock. Now the strait is reopening, and crude is back at pre-war levels near 68. The inflation premise behind higher for longer is evaporating. Gold sees it, that's the rotation bid. The dollar sees it, it's softening. The bond market sees it. The last to admit it will be the rate path itself. Read 2. Crypto. Bitcoin is up on the week, holding 61,500, but its exchange-traded funds just bled $4.5 billion in June, the worst month they've ever had. The price is rallying while the institutional flows walk out the door. One of those two is wrong. The line that decides it is 60,000. Hold it, and the bottom case strengthens. Break it, and the altcoins underneath have no floor. Now the sentiment check from our market and social monitoring. The finance commentary world is almost unanimously cautious. Sell the artificial intelligence trade, rotate to gold, brace for a 10 to 15% pullback. Meanwhile, crypto-native positioning is the most bullish it's been in years, precisely because everyone else is short, jaded, or sidelined. Two camps, maximum conviction, pointed in opposite directions. When it looks like this, somebody is about to be very wrong. That gap is where the edge lies. The tell of the day: the single worst chip stock on Thursday, Teradyne, down almost 14%, is the company that tests the chips. Its revenue just grew 87%, with a record memory test quarter. The market sold the company that verifies the artificial intelligence build-out as if the build-out were over. Frankie has the full breakdown in today's focus, linked below. Sectors in play. In the chips, the sort that matters is content versus capacity. Test, inspection, high bandwidth memory, the content that grows as chips get harder. That's a different business from renting out commodity compute, which is where a glut lands first. In metals, gold's bid is real, but gold over tech is now the crowded hedge, and a crowded hedge is a compressed edge. And in crypto, the structural story of the week. Robinhood chain went live, 28 million users. One tap from on-chain yield. That's rails being laid, whatever the token prices do. On the radar, Monday, the chips, a bounce or a third straight down day that decides whether this was a rotation or a top. Teradyne's own bookings and its second half guidance, the referee on today's tell. Bitcoin at 60,000. The crypto market structure bills August 7th deadline, where passage odds have slid from 80% to a coin flip. And later this month, the June inflation print, plus the hyperscaler capital spending guides. Do they still spend into the sell-off? And the scorecard, because we put our calls on the record, dated and falsifiable. Today's 2. 1. The semiconductor rout is a complexity mispricing. Testing and inspection keep growing with chip complexity. We are wrong if Teradyne's bookings or guidance get cut. 2. The record Dow is a rotation artifact that reframes as a growth scare within 2 quarters. We are wrong if payrolls re-accelerate from here. both go in the ledger. So the bottom line, when the index and its engine disagree, believe the engine. And here's the question worth your long weekend. If proving that the artificial intelligence spend actually works is now the market's demand, then who gets paid to do the proving? Sit with that one. That's the brief. Full written breakdown and today's focus with Frankie are linked below. I'm Earl. This is the Asymmetric Signal. One contrarian read a day. Subscribe.